exam. Number one is Truth in Lending Act is synonymous with Regulation Z. They mean the same thing. They're both the same. They're used interchangeably, those terms are. And you have to know the origins of the law. So it was very common practice for lending institutions to pre-approve somebody at a certain rate and certain fees. Only 6 weeks later, right before the closing date, they would throw a curveball on the borrower and charge and say, listen, if you want our money, there's been a change and you got to pay 0.5% more on your APR, and there's going to be X amount of dollars in additional fees. And many times the borrower found themselves in a position where they had no choice but to go along with it. And banks use this on a regular basis to pad the bottom line. So in 1968, Congress said enough, and they passed the Truth in Lending Act. Now, there are some things that you have to know about this act. Number one, it was passed in 1968. Number two, this law only applies to institutions that are regular extenders of credit. And that term regular is important as we get into this video. So we're talking about institutions like banks, savings and loans, mutual fund companies, should they provide home loans, car loans, credit card companies. It's not just real estate. It's all borrowing. Okay. And it applies to those type of lending institutions that on a regular basis extend credit to people. Now, it does not apply to real estate professionals. I think I had a student one time call and ask about this because there was a question about that on her licensing exam. And just understand that real estate professionals, we arrange things. We're not extending anything. So if we have a borrower or we have a buyer that needs to find a mortgage company, we're going to arrange the meeting between the borrower and the mortgage company. But that's all we're doing. We're not extending any credit. So we're exempt in that capacity from the Truth in Lending law. All right, so the other thing you have to know is, insofar as real estate loans go, the Truth in Lending Act only applies to, number one, owner-occupied homes that's 1 to 4 family residence. So single family home, a duplex, a triplex, a fourplex. So if somebody was buying a rental property that was going to be used as, obviously, as an investment property, or they're buying a single family home for a rental property, Truth in Lending really doesn't apply. But I will tell you, generally speaking, in the real estate world, almost everybody complies whether someone is exempt or not, just from an efficiency point of view. All right, but it only applies to owner-occupied residence, 1 to 4 family units. And the other one you have to know, because the real estate licensing exam does occasionally ask this, and in fact, with all of these laws that we talk about here, sometimes the real estate exam will ask you which federal agency is tasked with enforcing that particular law. And under the Truth in Lending Act, it is the Consumer Finance Protection Bureau, commonly known as the CFPB. They're the ones that have been tasked with enforcing the Truth in Lending Act. All right, so what does the Truth in Lending Act require? Well, it basically requires disclosure to the consumer. Remember, this law is specifically designed to protect the consumer. And the first thing and the most prominent, I think, is the lenders have to disclose the true annual percentage rate. Now, if you closed on a property in the last 20 years, you're going to notice that if you paid attention on your closing documents, there were 2 annual percentage rates that were identified on the disclosure. And one would say like 3.5%. The other one would be like 3.75, just a little bit more than the other one. And that is the higher one is the true annual percentage rate. So what's the difference? Well, you go to the bank and you fill out an application for a 30-year fixed conventional loan, and they give you a quote of 3.5%. Well, that 3.5% is what we call the note rate. And it's based on the amount that's borrowed, right? So you're going to borrow $200,000 at 3.5%. However, the true annual percentage rate includes all the additional fees that you're going to have to pay up front, whether you finance them into the loan or not, it doesn't matter. It's those upfront lender fees like origination fees, discount points, those type of things that add to the cost of that purchase. So let's say that you're borrowing $200,000, you have $10,000 in additional fees. Well, if you take that $10,000 and amortize it over the 30 years of the loan, that's what gives you that additional bump in percentage rate. So when you include the upfront fees that you have to pay, that gives you the true annual percentage rate of 3.75, which is just a little bit higher than the note rate of 3.5. That is because, remember, the reason this law was passed is banks would say, oh yeah, your rate's 3.75, but then they'd whack you with $25,000 in fees, and the actual percentage rate would be like 4.5%. So again, it was a hook and bait. So this way here, the consumer is being notified of the true annual percentage rate. That's probably one of the main core things that you have to know about this particular law. Now, the other thing that the Truth in Lending Act requires is if advertising of key credit terms is put into the advertising, then there are certain things that need to be disclosed. And what we're talking about here is what's called trigger terms. Credit terms are used in advertising. We call these trigger terms. Now, think about this. I'm sure we've all heard on the radio or TV car ads, right? So they're advertising a car and then it says 0% financing over 60 months. And then all of a sudden, somebody goes, so real quick, they put the terms out there. You don't understand any of it, and it's in little tiny fine print at the bottom of the screen. Well, because they used one of those trigger terms, that meant that they had to disclose all the terms for the credit, to get credit. So what are these trigger terms? They're terms like down payment amount or no down payment at all. Sometimes, hey, no down payment or $500 down, a 0% interest, payment period, payment amount, number of payments, finance charges. Anytime somebody says interest free or interest free for a certain amount of time or no payments for your first 6 months. Anytime they use one of these trigger terms, then they have to disclose in that advertisement, all the terms and conditions of that loan. All right. So one thing I want you to note though, look at the bottom. It says simply stating the price of a home or the true APR does not trigger the disclosure of the terms, right? Just saying that it's 3.5%, that does not, and we do see that sometimes with new construction where it'll be, the price of the home is $450,000 and 3.5% true APR, right? So that just simply stating that does not trigger truth in lending. But when we start using these trigger terms, that hook and bait, then we have to make the full disclosure. All right, so what does truth in lending require? If we use those trigger terms, then what disclosures must be made? And I have them on your screen here. Number one, the date financing charges commence. Number two, the true annual percentage rate. 3, the number of monthly payments required. Number 4, the payment due dates. When are the due dates? Number 5, charges for late payments or defaults, if any. Is there a prepayment penalty? And then what are the total charges for the loan? If you ever want to feel sick to your stomach, pull out your old disclosure form when you purchased your house and you had that 30-year mortgage and you paid $100,000 for the house, but by the time you paid all the financing charges over a 30-year period, you find that you probably paid $400,000 for the house. That's why it has to be disclosed. So anytime trigger terms are used, all of these things on your screen have to be disclosed in that individual advertisement. Truth in lending also requires that or at least the real estate exam is going to require you to know the exemptions and when does it not apply. So the Truth in Lending Act does not apply to investor financing. Again, rental properties, those type of things, it's not applicable. commercial or business loans, loans that are made to corporations and partnerships, loans with 4 or fewer installment payments, seller financing such as land contracts or deeds of trust, where the seller is financing the equity, and then loan assumptions, because loan assumptions, if it's a true loan assumption, the original terms have already been stated and they're not changing. Now, if for whatever reason under the loan assumption that the original terms would change, then there would have to be a disclosure that is made. All right, here's another application that you probably need to know under the Truth in Lending Act, and that is the law provided for a 3-day right to rescind after closing happens if you're refinancing your existing home, if you are taking out a HELOC or a home equity line of credit, something like that. So once you sat down and signed all the documents at closing, no monies are going to be dispersed for 3 days. There's a 3-day right of rescission, and that comes from the Truth in Lending Act. That's all I got for the Truth in Lending Act. If you're going to continue to study, check out this video. I think you'll find it very helpful. And if you have not subscribed to our channel, please do so. Click the little circle to my left. I would appreciate it. I will see you in my next video.